Andrew Williams.
Thank you, Mr Speaker. On behalf of New Zealand First, I take a call in the Taxation, Annual Rates, Employee Allowances and Remedial Matters Bill, and it's a great pleasure to come after Mr Simon O'Connor talking about clubs and the Capital Club and the Corporate Club, but in their case it's the Cabinet Club and tax concessions there. It'd be very interesting to know what sort of tax deductibility there is for donations to the Cabinet Club, but I'm sure they are all tax deductible. Indeed, I'm sure they're very tax deductible and significant. But, Mr Speaker, in terms of this particular bill, New Zealand First is supporting it because we are a party that stands for simplifying the taxation system and improving on it and streamlining tax matters. And we have always said, New Zealand First, that there is a need for a total overhaul of the taxation system to try and get more streamlining and to cut out a lot of the red tape that is in there. In this particular case, in terms of the employee allowances, we support the moves to improve the definitions of accommodation so that accommodation provided in conjunction with employment would not be subject to tax, and that reimbursements are much clearer in terms of accommodation. Also, to reduce administration costs revolving around employees being accommodated and taking part in work activities. It also refers to meal payments and light refreshments for a work-related activity or event. And again, that simplifies things and it reduces the amount of red tape around meal payments. This bill will also allow deductions for expenditure on failed or aborted applications for resource consents, patents and plant variety rights. And again, there is sense and it is sensible to do that. Some of these situations with patents, long extended, very risky ventures, same with the resource consents, and those should rightfully have definitions for expenditure if they fail. Also, in terms of charities, this bill provides for charities that cease to exist or are deregistered, that it provides for the calculation of tax on accumulated assets from the day the entity is removed from the charity's register. And again, in this situation, there can quite often be a situation where what is termed a charity no longer operates but may have built up a sizable asset base. And again, whether that should be determined in terms of its tax liabilities comes through in this particular bill, and rightfully so. We would not want people to miss out on paying the rightful tax simply because they move from a charity into another entity, but then try and get away on the basis that it was a charity in the first place. This bill also provides for community housing entities providing affordable housing that they would be eligible for tax exemption and donee organisation status. And again, if we are to support affordable housing and encourage community housing to be developed, there is great merit in providing certain levels of tax exemption there. There's no point in the government supporting community housing, the taxpayers of New Zealand supporting provision for affordable housing, to then turn around and tax that housing to add cost to it, when in actual fact we are all trying to deliver it at the lowest possible price. The thin capitalisation rules in this bill will also ensure that foreign-owned companies investing in New Zealand will pay their fair share of tax, and they cannot allow excessive gearing of their companies' New Zealand investments to load their debt in New Zealand in order to limit their tax exposure here. Again, this is sensible. We do not want international interests to use this as a soft-touch country to come, load up their debt, buy into organisations, buy into companies here in New Zealand, leverage it to the maximum, take maximum tax credits from it, and then depart the country at a later date, leaving a great tax loss to this country. So that will not be permitted under this bill. And the other last part of what is essentially, or two parts, this confirms the tax rates for the year, confirms the annual rates of income tax for the 2014-15 year, was a very standard administrative area of the tax. One concern that New Zealand First has always expressed, however, were the 2010 tax cuts that the national government brought in, whereby the very wealthiest top 10% of New Zealanders got sizable tax cuts. In the case of the Prime Minister, something in the order of $1,000 a week tax reduction to the Prime Minister. In the case of the then Chief Executive of Telecom, $5,000 a week in tax cuts. That individual was paid on his multi-million-dollar salary. Mr Speaker, that is an area where New Zealand First disagrees with what the government has done. However, in this bill, this is confirming the current year's tax rates, and we have to support that to ensure that there is continuity of a sound and stable tax system. And the last bit of this is the Foreign Account Tax Compliance Act that the United States is bringing in on the 1st of July 2014, very soon, which basically is a worldwide effort to combat international tax evasion. We've been advised and information is provided that New Zealand is part of a global signatory to this to ensure that there is tax compliance worldwide, and that the New Zealand Inland Revenue Department will be able to hold records for US citizens who are resident here and domiciled here or active in business here, and that they in turn can provide that information through to the IRS in the United States in situations where they are requiring to ensure that the appropriate taxes have been paid. So, Mr Speaker, very much an administrative bill. Like everyone, tax is something in your life. It's like tax and death are the two of the things that you must do in your life. Two of the things you cannot get away from, tax and death. And so, Mr Speaker, in that respect, New Zealand First will be supporting this bill.
David Bennett.
Thank you, Mr Speaker. It's good to see that last party supporting this bill and the support of, well, not